Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So it happens so that recent fundamental report is dedicated to macroeconomy. So some big events that probably will not have any impact on the gold market in the nearest few months. I suppose at least the 3-6 months we will not see anything. But in the long run, they are potentially supportive to the gold market. And today in the weekly report, we have taken some specific view, well, at least in the part that relates to possible performance of the gold market. Speaking about the stock market, where actually we have heard a lot about artificial intellect, rally of these big four companies, NVIDIA and so on. But somehow nobody talks about the leverage that now is applied on the United States stock market, and that this leverage has increased really dramatically in the nearest few months. And this is happening on the background of the massive abandoning of the United States stock market by the non-residents. So non-residents are leaving United States stock market, at least based on the cash flows that we see in analysis. It could mean that the problems on the stock market stands not too far, and well, somewhere probably August, September, we could already get some signs. Of course, this will not mean that this will be some really drastic shift in the global economy, but at least it might be the first sign of it, and it might be the triggering moment. So this first. Second, concerning the central bank's digital currencies and the recently launched the FedNow system. We think that it's also potentially supportive for the gold market in the long run, because the FedNow and CBDC, it means total control of the personality of any human being. It's absolutely total digital control. They could switch off anybody, any person, in blink of an eye, grab all the money, and so on. That's why the really rich people who would like to keep their capital off the eyes of the central banks, those who would like to finance some operations that they do not want to show to the central banks and the government authorities, they could use the physical gold, and in particular the coins, small bullions, and so on. And even simpler, just keep the capital out of the system in some storages, well-protected storages. So this really could happen. And that's why we see that this kind of the initiative of the CBDC, it's potentially supportive for the gold market as well. So keeping it all together, we come to conclusion that we mostly confirm things that we have said last week as well. So in the nearest 2-3 months maybe, investors will keep enjoying with their sentiment that coming the Fed pivot and stopping of the rate hike cycle, some bullish performance, anticipation of the economy growth, and so on. But somewhere in August and mid-September, the situation should start changing. This is how what will be impact on the gold market currently difficult to say. It's just because it might be as supportive as if, for example, indeed some big problems start to appear, or it also might be some holding, contracting for the gold market if, for example, Fed will continue rate hike in September and October, for example. It also might happen, but would not exclude the chance that this action that we see here, it might become the starting point of something bigger. It might be even the upper continuation of the previous long-term run that we have on the weekly and the monthly chart. We're not excluded. We're not sure yet, but this might happen, especially because take a look here, we have the hand and shoulders. And it's relatively big pattern. It's just because based on this hand and shoulders, if we're correct, this action might be somewhere above the 2000. So everything could happen. That's what we have currently, some thoughts on the longer term perspective on the gold. In the shorter term, everything goes really great with our training plan. No, we do not see any step down from our suggestion, our perfect scenario, and we do not see any reasons why we should not follow it in the beginning of the next week. Just to repeat it, as you can see on the daily chart, we are following with the big reverse hand and shoulders and consider 1930 approximately for a potential long entry. That's the point that bulls are waiting for. On the 4-time frame chart, you could see that market also shows no step down from our perfect picture that we have shown on Friday. Everything goes well. And just let's see what will happen with this scenario. Back to the target, where this will be hand shoulders to form or not. And bears, those who trade on the lower time frames on the hourly chart, could consider still taking the position right there. So our entry on the short side on Friday has worked nice. So you can see the pullback here both precisely to the 1969 confidence resistance, and the market dropped. But take a look right now, we see the minor sign of the minor reverse head and shoulders. So it could happen. I'm not sure that it's worked, because I suppose that, well, it looks so that it really has chances that it fails. The market will just accelerate down. But if it will work, that might be another chance to step in on the short side for scalp traders right from the confidence. In the case if we'll get this ABCD pattern up and these hand shoulders will be completed. This also could happen. It's just let's keep watching. But this is just a byproduct of our major scenario, because for us the most important thing is 1930 potential points of the reversal. All the other stuff that we have here on the intraday chart, this is great opportunities, nice patterns, but well, this is secondary to us. Just additional trading setups that we are following, just not to be boring with the following with the big scenario. So let's see how the next week will start.